Want to invest in real estate, but you don't have traditional income, perfect credit, or W-2s? Then listen up, because DSCR loans are the single most powerful tool investors will use in 2026. This video, whether you're on the mainland or Puerto Rico, will show you exactly how DSCR loans work, how to qualify, and how investors are using it to build their portfolio without tax returns or employment information. I'm Munar, CEO at Collab Lending, your bilingual guide to home ownership and investing across the US and Puerto Rico. Not only am I an investor myself, but I've been helping investors for over 20 years through every rate cycle, every market shift, and every type of deal. So if you're serious about investing, this video will save you time, money, and stress. Don't forget to subscribe for future investing tips. Let's start with, what is a DSCR loan? DSCR stands for Debt Service Coverage Ratio. And here's the simplest way to explain it. If the mortgage payment is covered by the rent, usually you can get a loan. Now here is the formula. It is the rent divided by the principal, interest, taxes, insurance, and any HOA that property has equals the DSCR ratio. So if the potential rent is $1,000 and your mortgage payment, including all of those things, is also $1,000, that's a DSCR of 1. And usually any lender will lend on that. If the potential rent is $1,200 and the mortgage payment is $1,000, then that is a higher DSCR. But as you can see, we qualify the property, not you, not your tax returns, not your DTI, not your employment information, and you can see why DSCR loans are exploding. And here's what we don't need for a DSCR loan: your pay stubs, W-2s, tax returns, employment verification. We don't even look at your debt to income ratio. If the property cash flows, usually you're good. This is massive for investors with write-offs, business owners, Airbnb investors, expats, those looking to quit their job, anybody who's in the FIRE movement, and those who have a lot of cash but no income. Now, you may be asking yourself, what type of properties qualify? Well, a ton of them do. Single-family homes, 1 to 4 units, long-term rentals, short-term rentals, mid-term rentals, non-conforming condos, traditional conforming condos. We can even do 5 to 10 units. What is the down payment, credit requirement, and reserve requirement? That's a great question. In Puerto Rico, the minimum credit score requirement is 700. That requires at least 30% down or 30% equity if you're doing a refinance, and you need a minimum of 3 months reserves or 6 months reserves or 12 months reserves, depending on your credit score and the ratio. Now, on the mainland, we do have lenders that will go down to 620 credit scores. The minimum that you can put down is 15%, but depending on your credit score, you may need to put more down. The minimum reserve requirement will, again, it will depend on your credit score and down payment, but you must have at least 3 months reserves. And we can do loan amounts anywhere in Puerto Rico up to $3 million. And on the mainland, we've got lenders who will go up to $5 million. Now, let me walk you through some DSCR example ratios so you can see why DSCR is so powerful. The first one is standard cash flow. Let's say that you can rent the property for about $2,200, but the mortgage payment is only going to be about $1,900. That DSCR ratio is 1.15. You're going to get many lenders to take that because it's got strong cash flow. Now, something that I would call borderline is if you purchase a property and it only rents for potentially about $1,600, but the mortgage payment is about $2,000, that DSCR is 0.80. You're still going to get some lenders to take it, but the rate might be higher and the down payment requirement might be a little higher as well. But that could be great for somewhere that you know is appreciating in rental market value. Or the third example is one that is busting with cash flow. You find a short-term rental where you know that that is making about $4,800 a month and your mortgage payment is about $3,200. That is a 1.15 ratio. You're gonna get many lenders to give you offers with great rates and a low down payment. DSCR loans also offer a variety of terms, including the 30-year fixed, adjustable rate mortgages, and interest-only options, which are great for cash flowing on those short-term rentals. One of my favorite things about DSCR loans is that unlike Fannie Mae and Freddie Mac, there is no cap on maximum finance properties. Fannie Mae and Freddie Mac cap you at 10. This allows you to buy unlimited properties with the DSCR loans. You can have 5, 10, 15, 20, 25 properties. As long as the property cash flows, you can have how many ever DSCR loans that you want. You can see why investors are going from 1 door to 10 doors really fast using the DSCR loan. For title investing, you can close the name in your personal name, an LLC, an S Corp, a C Corp, or a trust. Many investors choose the LLC for asset protection, but the flexibility is a huge win for this program. And yes, while this program sounds absolutely amazing, there are some times where the DSCR loan may not be a great fit. You find a property with high HOA fees, it's got negative cash flow, it's in an extremely rural area, or you're a new investor and you don't have reserves. So if you want help evaluating a property, running numbers, or you want to speak to a lender who's investor friendly and invest themselves, I'd love to help. I'm Andre Munar, your bilingual guide to homeownership and real estate investing in the US and Puerto Rico. So you can call, text me, email me, or book an appointment with me. And I drop new videos every single week, so make sure to subscribe. Until next time.